Okay, so I think that's sort of we've got most of what we're going to get out of that interest rate increase at the moment, and I appreciate your time, Al, because that's great.
Thanks, Ben.
What I'm for those listening out there, what we're planning on doing next month is coming up. We've discussed it a couple of times on the podcast, and what we want to really reach out and do with you guys is teach you how to run your personal finances like a business.
Could be business as well, isn't it?
Or run your business like a business.
Well, that's the irony, because some business owners, when I talk to them, hey man, what's your financials, and they're like, oh, ask my accountant. But you're a business owner, right?
That's right. You should be aware of all of these things, and it goes to your personal or your business. If you don't understand where you're at, then you're never going to get anywhere. That wasn't a bad analogy.
No, it's always what I use. I always say where you're at, right? Or what's your question, right? I love asking those. Yeah, go for it.
So I think tune in next month, guys. Same bat time, same bat channel. And we will be going through, in my experience, the best way to run a business and manage it, as well as Alan's insights as well, and really not just focus on budgeting, but also focus on what your goals are, what your dreams are, and how you can accomplish them through being clever with your finances.
Yeah. Well, you mentioned about where you're at. I think the key thing is, I know it's been recorded. Whether it's personal, you're touching into a topic which kind of like resonates with what I want to do with my legacy, right? Which, I've got 2 daughters, beautiful daughters, that I want to teach them the financial skills or the muscles that's needed to kind of, when they're getting older, like they can manage their finances well, right? That's kind of
That's perfect. Look, I personally have amazing parents, and they love me unconditionally, and I went to great schools and all of that. But it wasn't until I was in my mid-20s that anyone ever tried to explain finances to me, and and at that point, the napalm had gone off. It was so it became a rebuilding side of things.
Sure.
What I would love, and same for my son. I just recently had this discussion with him. He's 15 and he's decided that he wants to invest in shares, stocks, cryptocurrency.
Great.
And I said, that's great. It's fantastic. And he goes, well, I want to take a loan out. And I said, no, no, not at this point. You're 15. He's only just got his first job, which I'm quite chuffed with. He's got his first McDonald's job. So that's awesome. Fantastic. But I also want to make sure that the mistakes that I made when I was a teenager, he doesn't make. There's a million different ways to make money. Just make sure that you're not sacrificing your future to make short-term gains.
Well, I think a key thing it relates to, for those who've read a bit on myself or the podcast, lending them money and investing, which I done, and on some really crazy products as well. It's like giving a 18-year-old who's on the L's a Ferrari or Lamborghini, right? It's just not the best thing, right?
And well.
Yeah, to learn driving. So the reason why I said that is because in my personal experiences, I kind of like did that and I bought some option products, which were 6 figures. And then in the course of one night, I remember I leveraged my parents' home and lost 6 figures.
Wow.
Yeah, and that was like detrimental. That's in another podcast that I have, but it made me appreciate one thing. There's even times you think like, is this the end, right? It's quite crazy how finances and money. And the reason why I did it is because I grew up with parents that migrated from another country. They never had too much money, but I've always kind of like, what is the secret sauce that you need to have, right? So, a bit about my background. I worked at NAB when I was a graduate, but always wanted to be in private banking, which I did after the graduate program, and worked in the top 1% of clients, banking some well-known cricket stars and cricketers actually, and some barristers and solicitors. But what I learned is not so much how much you have. It's mainly what you do with your money, how you manage your money. So I had barristers, unfortunately, every Thursday, I remember extending their line of credit or overdraft or whatever lending facility that they have, and they earn a lot of money. Versus some other barrister, like, that is smart with their money and they manage it, invested, structure it in the right way, and they're pretty well off, right? So I guess, I kind of like try to take the shortcut and learn a few lessons. But since then, that's what created my passion and this skill set, because my parents never taught me about money. In fact, it's probably on the other side of the example, what not to do, right? Which is, you said, like, love my parents dearly and unconditionally. But the key thing is, they're not the best, experts to advise on finances. So hence, I think in whatever area you're studying, whether it's finance, business, marketing, so forth, just look at the experts that are getting the results and probably copy them. Is probably the kind of like not so good thing, like high school, uni days. It's I call it in business modeling, right? We got to model the good things.
Hey, if they're winning, then you do what they're doing.
Well, exactly, and leads to my next thing. Like, you talk about winning, and Aussies love, like, sports, and today's actually State of Origin, the first game. So
yeah, it is too.
Yeah, so I guess why am I talking about sports is because we talked about finances, and I think it's important to understand in business or even personal finances, you need to have a scorecard, right? I mean, tonight we've got Maroons playing New South Wales. We need to know who's winning. So what do we usually look at, Ben, when we're looking at who's winning?
You look at the numbers.
You look at, in other words, the scoreboard, isn't it? The scoreboard, yeah. Right? How many tackles or the stats and stuff like that, right? So, I mean, they go through that at halftime. I don't know who's the commentator, but they'll go through, hey, there's X amount of percentage in possession. But my question to you now as a business owner, how often do you look at your kind of scorecard, like, or, friends that you've spoken to, like?
Well, I mean, me, it's become critical.
Correct. Yes.
When I was younger, and I started a business younger, and it went terribly. Like, not because I didn't have the skills or anything like that, but because I didn't evaluate what I was doing. I didn't set parameters that I needed to operate in. And I think especially when you do have a business, if you can and especially if you're younger, you can, or you've never had money coming in in those amounts, it's very easy to lose sight of what your actual goals are.
Yes.
Straight away, you see that money coming in, and you go, oh, well, that's my money. And you're like, no, that's not your money. That's the business's money. Okay, you need to, and you need to set the parameters, and you need to learn how to operate within those. If not, then you're going to get lost.
Yeah, and then, that could be GST, that could be wages and so forth. So going back to, that percentage, which you're doing it religiously, Ben, which is a fantastic skill set to have, is having a scorecard. So, the business scorecard, unfortunately, when I ask, especially in lending or even myself, is what's your profit and loss and balance sheet? So to some of the listeners who are going, what's a bloody balance sheet and profit and loss? Well, they're the two important scorecards to show whether your business is doing well or it needs some improvement, right? But the unfortunate fact when I talk to business owners is that they produce that document. What happens? They look at it. It's, they have a drink when it's in the red, but they also have a drink when it's in the green, right? Or black, right?
Or the black, yeah.
So I guess because they don't know how to read it. So I guess going back to the personal side, that's the same thing. Like, my vision is to raise the financial intelligence when it comes to, finances in general. And I want my two daughters, when they're working, I'm sure with your son, like, hey, can they produce a profit and loss on their personal merit and also their balance sheet, right? Assets and liabilities,
That's exactly right. And I think one thing I've always been a bit of an advocate for, and actually really should be doing more about it, is I believe school should be teaching the basics. I went through business studies. I did all that sort of stuff. I walked out of that after getting good grades and knew nothing about reality.
And you know what? I did business studies as well. And I know, like, they talked about sole trader and the different types, but, if it was one thing, right, that is practical, is what we're talking about. What is your scorecard in your personal merit finances and also in a business? Because business just means it's another entity, but producing a profit and loss and balance sheet, right? I mean, there is another scorecard that's quite important. It's probably the cash flow side of things, but I won't talk about it because that's the simple. I mean, one book that really inspired me, Ben, when I was 18, and I was given a book by Robert Kiyosaki. And for some of you guys who know Robert Kiyosaki, what's the famous book? You probably know, Rich Dad, Poor Dad.
Oh,
right?
yeah, of course.
Oh, that one.
Yeah.
Yeah, so that kind of like, shifted my mindset. And I think, look, sometimes when, you take massive action towards the way that you want to, it needs that some of, book or distinction, someone telling you something like that mindset needs to shift, before. And hopefully this podcast that we're doing, Ben, is that, catalyst for that change, isn't it?
Yeah, look, I hope so. And I hope even if a few people change their mindsets based on hearing our conversations, then, we've done our job.
Yeah. And I think, look, if you don't have that scorecard, you ask where they're at. They don't even know bloody where they're at, right? So that's the challenge that we face. Like, I want to go somewhere, but hey, until you produce where you're at.
Lost in the wilderness with no compass.
That's absolutely correct. Like, you want to go to Bondi today. Like, I mean, where are we at? We're in this beautiful Bella Vista Hotel, but, is it north, east, west, or?
Well, with my sense of direction, I'd be lost without Google Maps.
But I think, look, this hopefully is useful information in terms of, we talked about scoreboard and you just need to know the scoreboard or your businesses or multiple businesses. But if you're a business owner and you're telling me that, hey, I don't know my profit and loss, and it's like flying a plane, and I don't know, I haven't done it myself. Have you done that yourself, Ben?
No, thankfully, I'm still alive because of that.
But let's imagine we're in a plane and we're in the cockpit, flying. How many instruments are there, right? There's so many different, instruments, and this does this, right? And that's the same thing when it comes to your profit and loss and balance sheet in finances. It does tell you sense of information. If you're in the red, there's definitely good reasons, right, why you're in the red, right? You're a marketing man, right?
Yeah, sure, that's right.
If you're not doing enough sales and all the expenses are more than what you're making, are you going to make a profit? I don't think so.
Probably not, no.
Yeah, so I think, people have a drink when they're not making a profit, which is interesting. So I guess we need to get to the bottom of it and really correct that,
But again, if you're coming through and you're looking at why you're not making profit, this goes back to that Band-Aid analogy. Rip it off, figure it out. Having a drink is fine, but get up in the morning, then turn around and try and find a solution.
Well, I think that's the key, and we're going to talk about it in future podcasts. In my business, multiple businesses that are profitable, but it's more around the mindset and the story that you tell yourself, right? I always feel like, as a business owner, who's the biggest chokehold in the business? It's not your clients, it's not your processes, it's not, the margin or what you're selling. It's what? The business owner himself or herself, right?
Yeah.
Don't you agree?
Yeah, we do.
So once you get that distinction in terms of, hey, what am I willing to let go of, or what am I willing to change or implement more, hopefully your business gets better.
Yeah, I agree wholeheartedly.
Sorry, we just unleash a passion of ours.
No, it was good, very good. Okay, guys, look, we're going to wrap it up for today. Thank you for listening. We will be back next month with... What I'm thinking is we're going to call it the scorecard at this point.
The scorecard. We would know who's winning, right?
That's exactly right.
From the state of origin.
So we're going to try and have something. We're going to put something together for you for next month to help you run your personal finances and your businesses more effectively, and maybe come up with a way to give you a visual scorecard on it.
Yeah, definitely. Looking forward to it, Ben. Thanks for your time.
Thanks. Okay, so Val, it can't be all dark and gloomy. What's some positive things that we can take out of this news that most people might not understand or sort of fail to realise? Well,
I think, like I mentioned before, if a first-home buyer, there may be better opportunities in negotiating a deal that you can settle on. That's number one, okay? Because everyone's afraid or not getting the price that they want. But if you're already pre-approved in the market, you probably can strike versus like 20 people at an auction or private inspection probably 12 months ago. Secondly, I still see investors getting ready. So meaning what I see is that the ones that can do it is getting that cash out. I talked about it, the OPM, other people's money. So getting ready with the equity in your home, again, purchasing an opportunity. I think when the rates are going up, people see, oh, it's costing a lot, but maybe they don't see there could be an asset that's returning good money. Now, this is not advice. I'm just saying, as long as the rental is covering the costs, right, and you can get into it, and you can, right, there could be some opportunities that you can negotiate. Sometimes it could be something that you negotiate, which you're very good at, Ben, yourself. If you buy very low and it's returning a good rent and it covers all the costs, why not? So therefore, what I'm trying to say is do your research and do your numbers, right? Because a loan is just an aspect that's how much it costs. It can change. It can be fixed. It can be variable. That's part of the game. But I think if you know the mathematics and what's the buffer, what's the exit, these are the main questions we need to ask as a mortgage broker under the best interest duty. So I feel those of the opportunities are showing up. So the people that can do it, they're preparing for their next purchase. So, when people go, oh, when should I buy property? It's like, well, people will say, hey, now or yesterday, but it's more calculated purchase. I mean, that's the key idea. So I feel we're busier than ever as a positive because we're helping more, Australians work out their options, right? Rather than, hey, they feel like they're stuck with that lender, which isn't the case. The other positive is that if you can refinance, we talked about that, and some lenders are offering $3,000, $4,000 cash back in refinancing. Now, there are some costs in exiting, Mark talked about that yesterday, Mark Burris, probably around $1,000 in exiting. But if it's a $4,000 cash back, you're still $3,000 ahead. I mean, wouldn't it be great with that scenario? He said the repayment was $2,500. We refinanced, so the repayments is now $1,900 plus $3,000 net in your pocket. What would you do with that extra $3,000, Ben,
Yeah, well, I'm not quite sure, but probably not to talk about it on this podcast. No, that's great. And I tell you what, that other people's money has worked its way into my vernacular within a month. I love that terminology. I've talked about it a couple of times now, and I've pointed out a few people towards that section of that podcast.
Yeah,
and it's an amazing way to look at it. It's an amazing way to view how you're investing, how you're looking out for yourself, using other people's money. I love it. I think it's such an interesting way to phrase it.
But also, I'm talking to businesses, and in fact, it triggered me. I'm talking to one of my mates, and he runs a very successful business, and I say, get the money, right? Not when you need it. Get the money when you don't need it, right? Isn't it that planning, right? We don't plan to fail, but we failed to plan, right? I'm not saying he's taken massive action, and in fact, I think today his loans been approved, right, for the business, and that's exciting news because we can only cash is king, like they said in business, and I think if we relate to our personal situation, obviously for people that have built up that equity, because some have just gone into the property market and may still need to pay down their loan before they built that OPM. Mm-hmm. So, but I guess the key thing is to ask if you're not sure. It's good that we have this podcast, Ben, because it's not painting always sometimes the rosy picture or the world's ending and there's YouTube. There's so much resources out there, but until you really talk to someone that's an expert and they've listened to what you had to say, where you're at, where you want to go, then we can provide the valuable advice.
I think that's true. I mean, I was looking at some of the media pictures that they have painted over the last couple of days in preparation for today, and some of it's pretty grim. But I think people need to realise that bad news sells better than good news.
Of course.
And taking a negative spin on anything is going to sell more news. A love story doesn't sell, but a war does. So, I think people need to be aware of that. That these people are not writing media stories in order to help you a lot of the time. They're writing it because they're running a business as well. And, bad news sells better.
Yeah, but I think going
One of the
back,
days of sex sells.
it does. But I mean, you know, loans, unfortunately, rates, it's just a mathematical formula, right? But I think if you may go, hey, 30 years, 25 years, but if we explain, it's all factual. It is a reduction in your, monthly repayment. But importantly, if the repayment type, like I said, principal and interest, and I won't go into the detail right now, versus interest only, it just, once you understand that concept and even OPM, like, you know, I have clients like that, yes, we had to increase, it affects everyone, right? I mean, even myself, right? On my variable loans. But if someone's got a cash out or OPM of $1 million offset in their account, like, would they be even concerned about this rate increase?
No, I guess not.
Right. So therefore, that's what I'm trying to say. Like, you need to plan and weather the storm, right? There is one. One thing I learned from my mentor, Uncle Tony Robbins, right, was like, winter, he always talks about winters here. And I think, like, after the 2 rate increases, if you make it mean that, hey, winter's here, my question to you is, are you going to freeze to death? Or you planned well ahead and you're going to snowboard and ski through the slopes, So that's a great analogy. So I think the mindset is quite important, and the story that we tell ourselves. But more importantly, if the story doesn't paint a good picture, what are you going to do about it? That's my bottom line.
I think that's, exactly right. And then I think these days there is absolutely no excuse for not being well informed. I said that I came across some negative articles while researching for today, but in order to sort of counteract that, I tried to find some positive about this news, and there was a plethora of information about suburbs that. What places are going to thrive through this, where they're the best to invest.
Yes.
And like you said, it's all mathematical formulas. There are formulas that figure this out, and it's just a matter of going out there, having a look at that information, and seeing if that is right for you.
And also sometimes, Ben, when we do say no, it may be like in terms of mortgage or something, or you're not ready yet. It may be the best answer ever, because you may not be ready at this stage, right? And there are some people that we have inquiries where they want to buy their first home and they want to be $1 million mansion, but they really can't afford it. And we have to tell them, like, I didn't start off with $1 million mansion, right? You need to buy something that you can afford, right?
I think that's a hard truth, and I think people need to, everything's been riding so high for so long.
Yeah.
Sometimes, people need to be pulled back down to earth a little bit and just go, guys, just calm down.
And I think lastly, it's what you can do. Like, interest rate, I cannot control. Ben, you can't control. No. But what we can control is, like, do we seek some help and put our hand up, right? I remember at school, like, hey, I need some help, and there's always people around. And I think in Australia, like, it's a great environment that there's so many experts. You're right, you got access to so many information, but I think the organization of those information is quite critical. So I think you mentioned digital shepherds, but I think if you were to talk to me, or different clients talk to us, we can go, hey, where they at? What do they need to go? Hey, step 1, 2, 3, and ABC.
Yeah, exactly right. And I think that's on the flip side of there being so much knowledge. Without someone to sort of go, hey, this is rubbish, this is
correct.
This is good. It can, all you have to do is scroll through Facebook and, on your Facebook feed to see how much information out there, and you just go, oh, really? So look, it's a double-edged sword, isn't it? If you've got someone who can guide you through what you should be listening to and what you shouldn't. But I still think that there's no reason that anyone in this day and age should be uninformed about any subject that they're interested in.
Absolutely, because they can access it so readily available, isn't it?
A little bit of DuckDuckGo or a little bit of Google, and
YouTube, right?
I'm pretty sure I know the age of every celebrity that's ever interested in me just simply because of Google.
But I think when it comes to finance, could be a quite personal and in fact could be an emotional topic. So I think it's about speaking to an expert who's walked the road or helped many people walk the road to kind of like listen to your situation and see if we can help.
I think that's exactly right. I think people become terrified of these big nameless corporations and banks and things like that, and they think they're going to be judged for and I've mentioned before, the actions that I made when I was 19 and still
Yes.
in uni. I would hate someone to look at that now and go, I went now at 35, and people go, wow.
Yeah. But wouldn't it be great if we can help some people, avoid them doing something like that, right?
The best thing I ever did was go to a financial planner, and
great.
turn around and go, hey, this is what I did. And they went, yeah, that wasn't great, but moving forward,
Correct. Yes.
you're a 19. You're an idiot. Everyone's an idiot at 19.
Well, we won't call our clients idiots.
I didn't call a client idiot. I just meant in general. Most people would look back when they're 19 and go, oh, those decisions that I made.
Yeah, well, sometimes the truth will set you free, Ben. That's the key.
The truth. I like that. I like that a lot. All right. Well, give me 2 seconds. I'll be right back. Sorry there. I managed to cough myself into oblivion. So what do you think the long-term effects of what we're seeing now will be? I mean, the short-term ones, obviously, the increase in mortgage payments and pressure on people, but also a direct decrease in the housing market. What do you think the long-term effects are going to be of a decision like this?
Well, I guess we need to, it may be too long to tell, Ben, because we've just been, a few months doing this, and how many changes has there been? So there's too many variables that will, really say what the long-term effects are. But I think it's going back to, if the rates are increasing, like from a less positive perspective, the repayments are going up. That's inevitable. And we need to buffer for further increases. So it's really reminding clients to make sure you have a good solid budget. We talked about Uber and other stuff. Like, some things may not be as frequent as 2 years ago, when it's like easier cash and access to that, right? For the positive side is more the first home buyers that kind of like couldn't get in the market. Maybe there's more opportunities there, right? So, but if it continues to increase, obviously it will have long-term effects, like people not buying properties, right? And we talked about I know some of the questions you're going to ask, what are the renters, right, that don't have a mortgage, right? So probably potentially, if a landlord owns the property and they feel that there's pressure, whether it's an interest rate payment or costs, then you can see them increasing rents to go up. I'm not saying right now at the moment, but it depends on the market, right? So if it's a similar property, we're all feeling the pinch. The landlords are increasing their rents, and then from, let's say it was $400, it can go up, right? Because the costs is need to be absorbed by the landlord.
Yeah, for sure. I think that's it's a good observation. I think that the longer this goes on, that the more pressure is going to be put onto those renters as well.
It affects everyone, I guess. It
affects everyone, yeah. I mean, some people can be going from, as we talked about, being positively geared to negative geared overnight.
Yeah, I had a client that said something to me along those lines today. But I guess, also going back to structure, like I would ask, is that loan principal and interest on an investment, can that be done on interest only as one of the factors? Can it be, reduced in terms of loan amount? So there's a lot of questions that we call it rejigging or restructure. So this is, I think, the key word moving forward. Yes, rates are going up, but, do you have, if you're owner occupied listening, like, do I have a lot of redraw? I was just mentioning to the guys, like, can that be like structured as an interest only, that you get access to that redraw, and then the remainder of the owing could be restructured as a principal and interest loan to pay down the debt? Certainly I've seen that with some, some of the places I worked with, like in private banking back in one of the big fours, like structuring is a key thing. So I think clients are under the assumption that, we talked about set and forget mortgages. They think that if we're going with a lender for 30 years, that's the lender that you're stuck with. But I think with choice and the internet and technology, you can move and change pretty rapidly and quickly. So I guess, what's preventing people from doing it? One thing I don't want to say, but it could be laziness, right? In terms of, I'm just being honest, but it can cost time, right? That's the sort of things. Yeah.
Well, I think in that regard, yeah, laziness is but laziness it affects everyone's part of everyone's
including
life.
Myself.
Yeah, I could go to the gym every day, but I don't. But yeah, I mean that's laziness, and I think that uncertainty we've spoken about before is also part of that, where people aren't confident about what they're doing, therefore they don't. It's like checking your credit score when you know that you've done some bad stuff when you're younger. Yeah, it's it's once you rip the Band-Aid off and you do it, you're usually pleasantly surprised.
That's
but
right.
if you that sort of fear of the unknown that you going there, it's the same sort of thing. You don't want to go into a bank and make things worse or so. I mean, I guess this is where people like yourself come in. And can be those digital shepherds that we've discussed before. Guide people through that process and also understand what's happening on a broader scale within politics, finance, and things like that can help people that the average Joe probably doesn't understand or want to understand.
Well, I think firstly, our advice is free, right? I mean, and you might go, well, if it's free, then how come, other people don't provide it? Well, secondly, if it's free, like we've walked the road, like has this person done the stuff that I need to? Are they an expert? How many transactions have they done? Like this is our bread and butter. So we do that all the time. So I think it's that story. I mean, if you talked about that Band-Aid in ripping it off for your credit score, I feel even before that, it's getting through that. What's the story you're telling yourself, right? I mean, you associate so much pain in the story in terms of ripping it off, right? I've never had that analogy, by the way, but it's a really good one. And in taking massive action, I mean, if they want to see the future or better one, I mean, obviously that's the first thing to fix their credit. Now, that's one of the many scenarios, Ben, of course. But I guess if you're in that spot where you feel, oh, I'm not sure, should I talk to the bank? Well, firstly, talk to a mortgage broker. It's free. Yeah. Right? What should I be doing? Like I already mentioned some tips, like go back to your bank and ask for a better one, right? Better interest rate, I'm talking about, lower the interest rate. If not, come see us. Can we restructure it in a way? Can we reduce the loan repayments? There's so many things we can do, Ben. So depending on that person's scenario.
Yeah, no, fantastic. I mean, that's, perfect. I guess leading into that, there's going to be a lot of people who are feeling that financial strain. I guess what are some positives that you can that are out there other than just refinancing? And we are good to go. Alan, recording in a new studio today.
Beautiful.
Not over Zoom, where I sometimes end up looking like a Minecraft character because my internet's terrible. Yes, I get the Minecraft references because I have a 15-year-old son now.
There you go.
But, okay, so lots of big things have happened over the last couple of days.
Yes, doesn't stop, does it?
It never stops, sadly. But the one that's at the forefront of my mind at the moment is the Reserve Bank.
Yes.
Choosing to raise it by another 0.5%.
Yes.
And that has been getting some non-stop coverage at the moment. What do you think sort of drove them to make that increase?
Well, I think the chairman from the RBA was commenting we had pretty high inflation given the pandemic. Interest rate got low and people started buying and went into a frenzy. Like if you were to talk to some of our clients 12 months, 24 months ago, they're probably struggling to get into the market. So it was just too hot where RBA needed to do something. And obviously that's one of the bases that they based it on. It came a bit of a shock that it was 0.5, to be honest. I was expecting a bit less. Especially after last month it going up by 0.25. Yeah. So I guess sometimes when people read it, like it's 0.85 and just to correct that, it was 2 months ago at 0.1. That's the cash rate. Mm-hmm. But then it increased 0.25 last month, so it's 0.35. And then yesterday's announcement is 0.5. Therefore, the cash rate now is 0.85, because I get clients like go, oh, it's increased by 0.85, but that's as a result, that's where the cash rate's sitting. So it did increase by 0.5, still a lot in most people who's a mortgage owner, right? And it would have impacts if you're on a variable interest rate, your repayments.
So do you see this having? Well, you seem to indicate there that it'll be have some positive ramifications for people trying to get into the market.
Yes.
But it could be detrimental to those people who have multiple mortgages at the moment.
Well, definitely the repayments would increase. But I think like if you went through a bank or mortgage broker, they would have buffered some of these increases. Not the best that we like, because it's going up, so you're paying more. But I guess in terms of, the world's ending, I can't afford my mortgage anymore, right? Well, the bank factor in, I think we mentioned in our last podcast or gathering or Zoom, they factor in at least 2.5% of an increase, right? Sure. So, I mean, yes, nowadays probably the lenders are rethinking, is it a 3% buffer and so forth. But I feel there are a lot more. If you talk to a mortgage broker or someone that's a bit more expert, you can restructure your loans. And I was watching the news, and Mark Burris came along and talked about, you just got to take some action, and you can't just leave it in terms of the bank's hands. And we talked about loyalty tax before, right? So you really got to look at, what am I getting? Is there any choices, and can I restructure? Those are the questions that we constantly need to ask ourselves, right? Because it's not going to be fixed and low forever. That's the bottom line, isn't it?
Well, we discussed this early on, which was there's no such thing as a set and forget mortgage.
Yes, I think that's very important. Yes.
So I think, for any of those people out there listening who are panicking, don't panic straight away. See what the options are. Evaluate. There is always light at some sort of tunnel, and you just got to make sure that you're taking the right steps.
Well, talk to an expert, right? I mean, if I was to relate back to the pandemic, like if you got a cough and flu, or something, like you're not assuming that, hey, you got COVID and you're going to die, right? I mean, the first thing is talk to your GP, or it gets worse. You got to talk to an expert and see what it is, right? So there's definitely a lot of media coverage, no doubt, but everyone's circumstance is different, Ben. So I feel we need to do that firsthand. I even did even on my kind of business profile, some question and answer. First thing is, go back to the banks, ask them if you can get a discount.
Well, yeah.
If you don't ask, you don't win, Ben.
Well, if you don't, my mother always has a saying: if you don't ask, you don't receive.
Yeah. So I think that's to eliminate that loyalty tax. But if they said no, they won't budge. That's when you kind of need someone like us, an expert, to kind of go through, is there other options? And I want to talk about it here because it's about restructuring the loan. I mean, Mark talked about it in the news yesterday, how some people may be on 3.5 and percent in terms of the interest rate, and with 25 years to go. But if you were to refinance, your repayment gets reduced to, I think, 1,900. He did have those figures, and that's probably what we'll do, put those figures or that link to the article so people can refer. Then basically their monthly repayments got reduced. So by taking some action.
And it's up to each bank if they're going to pass what they're going to pass on, how much of that increase, or because I know that they don't always pass any decrease on, but it is up to each bank, isn't it, to come to their own decisions.
It will be interesting to see in the next few weeks, and no doubt already we're in our brokerage we're seeing a lot of clients email, ring, and obviously get can we refinance and do something. I'll take a massive action, basically. What we just mentioned before. However, the banks haven't set their increase. Some may be passing the full, some may not. So it takes a bit of time to adjust in the next 7 to 14 days. It would be interesting to see what the environment will be like later on. Then we can kind of compare, hey, what's the cheapest and what's the most expensive and so forth.
Will there be some sort of delay now with any loans that are going through, because something like this happens and the banks, they need to, especially the big four, they're going to have to reevaluate what their rates are, aren't they? And then before they move things forward, is there any sort of hold up over there or delay?
Well, in terms of passing the full increase, I think I just saw, Westpac passed it on straight away, right? So, they're very quick to act when it comes to rate increase. But when it comes to rate decrease, it may not be as quickly for the savings of mortgage owners, unfortunately. But in saying that, if people do have approval, if you're variable basis, there's a chance that it can go up when you settle on your property or your home loan. If you're fixed and you haven't taken a rate lock option, that could be at risk as well. So these are people who've got a pre-approval or an application going at the moment. So that's where we're kind of trying to inform our clients that, hey, something to be aware of. For example, some of the risks potentially, if you're pre-approved, like your borrowing capacity is X, because the rates increase, their borrowing capacity may reduce. So these are the things that you may need to go back to your bank or broker just to double check if the rates and affordability is the same.
Yeah. Okay. So is this is going to help? You said slow down that housing boom. That, well, I can't remember there not being a housing boom, particularly in say New South Wales. Housing prices have pretty much increased steadily since forever. And now I'm seeing that they're expecting the average home will decrease by 7% from 2022, which was SQM was predicting that. Do you think that's oh, you sort of hinted at it before, but that might be an artificial way of slowing that bubble?
It is, but I guess good things to note, and it's not always a best indicator. The fixed rates now, if you were to look like a few months back, or probably 6 to 12 months back, they were sitting probably at 2s, right? You can lock in, especially, I locked in my 4-year rate at a particular bank for 1.99. Like, those rates were gone, because if you look at a 4-year rate, which I've got something pulled up at the moment, one of the lenders is offering 4.39. So it's just moved so quickly, right? So therefore, what I'm suggesting is to really have a look at what the fixed rates are doing, right? Could be a reflection of how the interest rate movements are going to be, right? So, is it going to be 7? I don't see any fixed rates at 7 at the moment. So, but there is talks of further increases, and I guess it's more, again, restructure, review, look at if you can get a better rate. That's the whole idea. Yeah.
Yeah, well, it could be worse. We could be in America.
Yes, and I think other countries have increased over 1%, right, in terms of their interest rate. So, their inflation, certain countries are double digits. So, they have to do something drastically to slow that down. And I guess the other thing to add is the access to money was quite cheap, probably during pandemic days, whether it's for businesses or with interest rate at 2%. And a buffer rate of 2.5 or 3, which means it's 4.5 to 5%. People got a higher borrowing capacity than before. So I think in anything you do, it's important to look at buffers, which is what we ask as part of best interests. If you have that, then you can weather the increases, right? That's the key idea.
Other than mortgages, is there any way that this is going to impact everyday Australians?
Well, I guess the key thing is just the repayments is going to be higher unless you're fixed, right? So it's really, it will affect the household budget, no doubt. So it's really reviewing, hey, what else, is it the extra Uber Eats that we choose not to get, right? Those sort of things we need to start factoring in and having a think about, because you're not going to be like behind on your mortgage. So some things, unfortunately, may need to give, right? So yes.
Yeah, I guess it's an odd time for Australians. It's an odd time for the Western world at the moment, with oil prices and the cost of living going up.
There's definitely a pressure. There's no doubt. With even petrol prices increasing and that drastically, even though there was a bit help from the government, we're feeling that pinch along with the mortgage repayments, isn't it?
Yeah, well, hopefully now that everything's starting to, hopefully settle down a little bit within the Australian political sphere now. Hopefully things can even out a little bit. People get used to the new boys and girls in charge, and see, see where the lay of the land is in a few months.
Yeah, definitely.
Sorry.
Okay.